Did you know that 80% of home buyers struggle between purchasing a new build or an existing home? Today we'll uncover the key differences that can make or break your home buying experience. Today we have Taylor Wright, loan officer at SecurityNational Mortgage Company, who specializes in new builds and just general loans overall. Taylor, do you want to go ahead and introduce yourself?
Yep. So I've been in the business for about 9, almost 10 years, which is crazy to think.
Yeah.
Been with Security National the whole way through, and yeah, just winging it every day like everybody else.
That's awesome, man. I'm Beau Christensen, your host for Mind Your Mortgage and media marketing specialist at Security National Mortgage Company. In today's episode, we will explore the differences between new builds and existing homes, effective mortgage team management, and insights on the current home building market, all while gaining valuable tips from Taylor's expertise. So let's get to know Taylor a little bit better. What is something that people don't know brought you into the mortgage industry?
Oh, what brought me into the mortgage industry? So I graduated in finance. I was planning on working for a bank. I actually worked for a company that did foreign currency exchange risk management.
Wow.
Yeah, so in college I worked and did that. Really tough work, but I knew that eventually I wanted to work for a bank. I didn't know what I wanted to do. I wanted to deal with money, managing money, that sort of stuff. And I actually had my dad had a connection with someone here at Security National and knew that I was looking for something. The guy was willing to help me get into the mortgage business and learn it and figure things out, and it had to do with money.
Yeah.
So I was like, yeah, sure, I'll give it a shot. So I got licensed in the summer of 2016, I think. And then just the last year of college, I just did loans kind of while I was doing school at the same time, never having bought a house before, which was crazy.
That is
So,
crazy. That's awesome though. But yeah, I'm assuming you just kind of got hooked from there once you
yeah,
started making deals and everything.
yeah, I love talking about money and trying to figure out how to make more money with money and trying to grow your net worth and create wealth and all that stuff. And so being in the real estate industry is really cool because I feel like that's what it's all about.
Yeah.
But like with the mortgage loans, it's also kind of like managing, interest rate risk, managing like how much you're paying for property and all that stuff. So it's a lot with numbers, but I also like meeting with people. Like that's what's most
Yeah.
gratifying is I like the spreadsheets. I like get into it. I get thinking about it and I get nerdy, but I also like talking with people and like helping them,
Yeah.
helping educate them, which is like a
Exactly.
huge part of my job.
Yeah. Making sure that they're covered. It's all going to work out on their end.
They're comfortable.
Super
They
important.
know what they're getting into. Yeah.
Yeah.
Yep.
Love that, man. All right. So what are some of your passions outside of work?
I love golf. I love boating. I love slalom skiing specifically.
What
I
differentiates slalom skiing
So it's
from
one
just
ski.
skiing?
It's
Oh,
one
okay.
ski. So it's the one ski where you go like 30 miles an hour on the water and then you're just you go down a course. So I've never
Do you
actually
put
done a
both of
course.
your feet into the one
Yeah.
ski?
Yeah.
Oh, okay. Wow.
Yeah. So it's front to back and you're basically just trying to turn and cut across the wake as fast as possible. So that's typically when you'll see the people doing those big like turkey tails or whatever they're called, like where they turn really hard and a bunch of water
Yeah.
shoots up. So that's what it is.
That's intense, man.
I love it though. Like I used to be way into wakeboarding. I love surfing, but like I can do a 360. I don't know. I've tried jumping. I feel like I get like this high off the ground though when I
Yeah.
jump surfing, and I don't know. But my favorite is skiing, just because it's fast, gets your adrenaline pumping. So
That's awesome, man.
yeah, it's fun.
I didn't even know anything about that. All right. So how do you like to blend your personal life with your professional life?
I tried to actually do the opposite because I think I think so. In the mortgage business and in the real estate business, you are sort of your own boss, right? Where you can put in as much work as you want, or you can work as little as you want. It's just it's going to affect how many people you're able to help, right?
Yeah.
So, and I think a lot about that. And so what I try to do is actually when I get home with my two little girls, I've got a 3-year-old and a 1-year-old, is I try and shut that off as soon as I walk in the door. Like it's always a work in progress, but my personal life, I do like to have friends in the industry. So I do like to have the people that I work with. Like my goal is to work with people where it's a natural relationship. You
Yeah,
know, it's not just a business where we're actually friends in like real life and like we get together and we do things and all that stuff. So there's kind of like that piece, but like also like coming home, I try to not think so much about work, if that makes sense.
for sure. I mean, everyone needs their solitude from their
Yeah.
actual jobs.
Yeah, and the real estate industry, mortgage industry will suck it out of you if you're willing to answer the phone or text, which we are like occasionally, right? But it's,
Yeah,
it's when I'm home, I really only have, I get home at 6 with my girls and I really have until they go down like 8:30 every day. So I only have like 2.5 hours with them.
yeah,
So it's giving them all of my time and attention is what I try to do. So.
definitely. All right, so what is a fun fact about you that people might not know?
Oh gosh, I hate this question because I finally have one actually. I never used to have the answer, but I finally have one. So, but it's kind of about us. So our second girl was born in the car on the way to the hospital,
Jeez,
which was crazy.
dude,
We were
that,
we were on Bangor and my wife was in the back seat, and for whatever reason, we didn't stop or pull over on the side. She was just like, put your seat forward as far as you can because I don't have a ton of room. And then baby came in the
dude,
middle of the freeway. So
that is impressive.
it was
Oh my
it was
goodness.
so surreal, but like,
I bet.
because at the very beginning, like when we started driving to the hospital, she was like, oh my gosh, like I feel like the contractions are different. Like I feel like we're gonna actually have the baby in the car. And honestly, I
Wow.
was like, whatever. Like everybody says that,
Yeah.
everybody says I thought we were gonna have the baby in the car on the way to the hospital. But yeah, we started getting closer and we were going to Lone Peak Hospital and, on Bangor and just happened going through. I just remember driving through. So the Bangor and I-15 intersection,
Yeah.
driving through that light, I remember it. I was so grateful it was green. And I was turning left to get onto I-15, and that's when I heard cries in the back seat for the
Oh
first
my
time. Like
goodness.
just driving through that intersection. That's all I can remember.
That's incredible.
So it's kind of a
That's,
fun fact that not a lot of people know about us, but yeah, it's kind
yeah,
of crazy. Crazy story.
that's awesome. I mean, congrats on that.
Yeah, yeah, it's awesome.
All right, now we're going to get into some of our main topics, starting with what are the primary differences in things to consider when buying from a new build versus an existing home?
Primary differences between new build and existing. Um, so the process is similar. The main difference, obviously, is during a new build, you're going to be building over 6 months potentially. And what we do is we pre-approve someone originally based on their current situation, right? The main difference with new builds versus existing is typically you're going to get under contract fairly quickly with an existing home and be able to close soon. With new builds, you could be 6 or 9 months down the road and for whatever reason you change jobs, your income structure changes, your credits may be a little bit different, maybe you got a car. So we have to be a little bit more careful and a little bit more on top of it when we're pre-approving ahead of time and really educate our borrowers and let them know, hey, we're pre-approving you based on your income today. If anything changes, that could affect it. You're not 100% getting the loan. You're 90% of the way there. But like we got to make sure that it matches, and we're where we need to be when the house is done. The other thing that's nice is typically with new construction, you're buying a brand new house. Typically, there's no inspections that we have to worry about because you're buying a house that's new that has a builder warranty on it. Um, and the main difference, I guess, in the type of home is probably you're also with an existing home, you can buy more based on location. You can buy more centralized typically. With new construction, typically you're having to buy further out, like Saratoga, Lehigh, Harriman, West Jordan. Whereas, if you want to buy existing, you can pick and choose where you want to go. Sandy, Mill Creek, whatever.
Yeah.
The main, I guess I'll get back to your question. The main difference right now, like what's happening right now, is builders are offering significant incentives right now, like tens of thousands of dollars worth of money to incentivize you to buy one of their homes. And that's because what's happening right now is we're seeing a little bit more listings on market than we have in a long time, which just means there's more homes for sale. Meaning, the buyers can be picky and choose where they want to go, and be able to negotiate with the sellers. So builders are, they're building homes. Every month they have 12 new homes coming online, and if they have 5 that still aren't sold, they got to incentivize people to buy their homes right away.
Yeah. So what are some of those incentives that you've seen?
So a lot of the builders that we work with at Security National, we're preferred lender for, I think it's like 20 something builders in the Wasatch area, Wasatch Front area. A lot of the builders that we work with are typically offering anywhere from a 3% credit towards closing costs or rate buy downs. They're offering temporary rate buy downs, which could be up to $15,000, $20,000 in like actual costs to them. We're seeing 5% credits. Interest rate, so a lower interest rate, what they can do is they can buy your interest rate down as a buyer. They can get you a 5.49. It costs them a ton of money.
Yeah. That might be the best incentive.
It's a really good incentive. Yeah, that's kind of what builders are seeing right now and starting to offer more right now, because rates right now we're around 7%. Sometimes we're 6.5. Sometimes we're 7.25.
Yeah.
Right now, and so builders being able to offer a 5.49 interest rate for a full 30 years, like that affects your payment anywhere from $400 to $600 a month, which is huge.
Yeah, that's giant. So what are your thoughts on the current home building market and the impact of tariffs on building materials?
So yeah, we've talked a lot with our builders, and also I've been a part of some meetings with their suppliers as well. And actually the suppliers have said, even with the tariffs potentially with Canada, they're not expecting, at least just based on current pricing of lumber, for example. They've actually said that lumber is already won't be affected like everybody's anticipating it to be. Because a lot of builders, when this tariff stuff started to come up, were worried, if our lumber's going to go up 25%, it might be 10, 20, 30 grand more for a house, maybe even 50 grand for a house, depending on how big it is, of cost to them just for the tariff. But for whatever reason, and I don't know the specifics on this, but for whatever reason, we get a lot of lumber from Canada, even though there's like the tariff stuff going on. Apparently, this is as of like a month ago that I was a part of this meeting, but apparently lumber is in a category to where it's not going to be as affected as everybody was thinking it was going to be. And that's the biggest. So lumber, I keep bringing up lumber because that's the biggest impact on a builder's kind of cost for a home. That's the most expensive thing. The other thing is the one thing that they do have to take into account, which is going to be affected, is I think in Japan, a lot of the appliances are made. So microwave, dishwasher, refrigerator, all that stuff is made, I think, in Japan, and that tariff is going to cause things to go up. Now, on their costs, that might only raise it, couple thousand, $1,000, $2,000, $3,000, depending on the packages that the builder offers. But it's nothing like, the lumber cost. So
yeah, a lot more lumber's going in versus one appliance for the specific task.
Yeah. Right.
All right. Well, I mean, that's really good to know. It's something that's hopefully reassuring to borrowers and hopefully something that holds true as well.
Yeah.
but that's something that we'll have to keep track
Something
of
that is always
too.
evolving, right? Like it's
Yeah.
always changing, especially with this administration. Like it's always there's always something happening, and so it's you do have to be aware of it,
Yeah.
which is, builders, I mean, that's going to hit their bottom line, and so that's why they're so concerned about it. And so, yeah, like even if it's not going to be affected now, something could happen down the line. So you always have to know. And what stinks is that ultimately affects the cost to the buyer, right? Obviously. So
Yeah.
the builder is going to have to charge more. So the buyer's going to have to pay more. And that's going to end up being a higher cost, higher payment. So
Definitely. I don't
we
think
don't want
anyone
that.
wants that.
We don't want that.
All right. So, what are the key points to managing a mortgage team to ensure a smooth process?
Oh man, that is a great question. Um, to ensure a smooth process, everybody has to be an expert on the team at what they do. That's my belief. Everybody, even if you take Danielle or Katie on my team, they have to be the expert in some underwriting stuff. They have to know underwriting guidelines because they have to know, hey, we got a screenshot from someone of their their bank statement. They have to be able to know that we need the full bank statement. The underwriter needs the full bank statement. We can't just take a screenshot. They also need to know, um, income rules and guidelines. But the other thing too is I feel like they need to be organized. Like everybody needs to be organized and on the same page, with where a loan is at, and where it needs to get to close on time. A lot of times we're actually revamping a lot of things on my team just because we're adding a new person and we're switching up roles and we're doing a lot of stuff, and it's just having every process just dialed in where everybody knows what their job is super important. Um, because I wish I could be involved in every piece because I know a lot, or at least I feel like I know a lot. But unfortunately, the more business I do, the less I can have my hands in everything. So it's getting the right team members that are experts and that are very organized and communicate very well, is what I think is really important.
Yeah, I think especially from a top down, having that communication so you can actually kind of know where something's at because there's a lot going on behind the scenes of
There is a
like
lot more
behind
that
a loan.
happens that people just don't know about
There's a ton.
with getting a loan. It's so funny because sometimes we'll get an application, we'll do everything, we will pre-approve them. Month or two will go by, they'll get a new job and all this stuff, but they'll finally find their house and they want to close. And it's just amazing how you can feel like you can have the simplest loan, but then it ends up being the hardest loan to get closed for whatever reason. Because it's true, like mortgage rules and guidelines, some of them are kind of dumb. Like I understand like the point of them, but it makes it really hard for some people to get financing. So it takes a team to be able to figure out how to document a file and everything so that the underwriter can give the approval. Just because, yeah, we sometimes have to like take a loan and make it fit.
Yeah.
Right? Fit the rules and everything. Everything just doesn't fit magically all the time.
And I think that really ties back into needing people that are experts at their roles because these things update and
Constantly.
people need to really just like pay attention so they know what's evolving as they're going. All right, so you did bring up difficult loan, so that kind of leads perfectly into this question. What is the most unique and or difficult loan you've come across and what made it a unique situation?
Problem is trying to get this down into a 30-second answer because it was so complex. Cute couple, awesome. The best clients, nicest people, had their home paid off. They were buying another home. This home, their previous home, was not, they weren't going to sell in time. And they didn't want to sell in time because they wanted to have enough time to move everything over.
Yeah.
They were moving down to St. George. And so we have a loan where we can help them purchase the house without any money down. They don't have to get a home equity line to pull equity out of their house. What we can do is we can use the equity in their old home to purchase the new one, just for simplicity's sake.
Yeah.
Problem is with this specific loan, they wanted the lowest cost option. So we found the lowest cost option. Problem is that they didn't have enough income to qualify for that new mortgage payment that they were going to have for a handful of months. Because with that loan, you had to have enough income to make, without selling this home, their mortgage payment was going to be like $5,000. And they were retired, had their home paid off, so they didn't have enough income to qualify for that new home. So they had their son co-sign. Well, son is super successful real estate guru guy. And he has 60 plus businesses on his tax returns. And as a mortgage lender, we typically have to underwrite every single business. So that whole process of underwriting every single one of his businesses, because basically every property that he had an S corp or an LLC specifically for that property for liability purposes.
Yeah.
And that also translated over for tax purposes as well. So this cute little couple that was going to move to St. George ended up being one of the hardest loans we've ever done because we had son on there that made a ton of money. That's the hardest part about the whole thing, is he made a lot of money. But just because you make a lot of money on your tax returns doesn't mean the underwriter can just check the box and just say you're good.
Yeah.
We have certain requirements that we have to do for every one of the businesses. And so it was the most documentation, the most calculations we've ever had to do. So
I bet.
And unfortunately, we didn't know what we were getting into until it was like crunch time. So had we known the 60 businesses existed, son was co-signing, we would have started that a month prior, loan a month prior. But so anyways, that was the hardest loan we've ever done, and we all celebrated. They celebrated, the son celebrated, everybody celebrated.
Yeah, that's a big celebration.
So,
that's a lot of background work to do.
That was brutal, but we did it, and they were, like I said, they were the nicest people, and they were just so grateful. And luckily and that's what's so nice is some people know how much work we put into getting their loan done. Other people have no idea, and they're just upset we're asking them for more stuff.
Yeah.
Like how have we not given you enough? And we have to explain there's certain boxes that we have to check. Even though you're solid, like we still have to ask for your bank statement. Even though we know you have a ton of money, we still have to see it. Anyways, so they were super, super great to work with.
Man, I think that was the perfect answer for that because it was both unique and difficult.
Yeah.
And just that's a great story, honestly.
Yeah.
All right. So, as you've mentioned on your social media, clarity, confidence, and game plan. Explain how these affect your approach to loan consultation.
Yeah, so I think you're referring to one of my last reels that I had. So where I talk about, that's actually a video. So if you read in the caption, that's a video that I send out to every person that fills out a loan application and gets pre-approved with me. So that's one of my in-process videos where I educate through the loan process. So it's actually one of the videos that I send to every one of my clients. And that just tells them so we get an application for someone that's interested in buying. We get documents, we pre-approve them, we do all of the things that we need to make sure that their loan is going to work and they're 100% going to be able to buy a house. Once that's all done, we send the pre-approval letter out, and then we do a loan consultation. So the loan consultation is what you're referring to, which is where we give them a clear limit to their buying power, and we give them a game plan of, if they're not in a situation to where they can buy what they want to buy, we give them a game plan of how to get there. So like if they're pre-approved for $600,000, but they want to buy a house for $700,000, we give them a game plan on how to get that done as soon as possible because there's certain things that we can do. The other thing that the biggest thing that we do is we give them their buying power in their loan consultation. I educate them through the process. I give them a loan calculator so that when they go out into the, looking for homes, they can for 100% estimate what their payment is going to be based on how much money they're putting down, what the purchase price is.
Yeah.
Because I customize it so that they can only change certain, basically those two things, how much they're putting down and how much the house is. Everything else is going to be dialed in. So they'll know, hey, this house is for $750. They'll make the adjustments. This is what my payment's going to be. And they can do that with confidence. Because all the online stuff, you have no idea how much taxes are going to be, insurance,
Yeah, there's a lot of variables.
There's
those
a lot
aren't
of variables.
accounting for.
Yep. So we do that. And then the biggest thing that I like to do is educate them on their loan options. So if they're a first-time home buyer, there's down payment assistance, there's grants, there's low down payment options, and going through what the pros and cons are for each of those. And then for some people, just last week, I met with a lady that was wanting to buy a house. She was told by her bank that she had to get her dad to co-sign. Well, her dad made a decent amount of money, so she was a first-time home buyer, but adding him to the loan removed her ability, made her not able to get certain benefits of being a first-time home buyer because they made too much combined. They had too much income combined. So what we did is we got him pre-approved. We removed dad from the application. We did it just in her name so that she could get a $2,500 free grant from Fannie Mae to apply towards her down payment. So that's free $2,500 just by removing dad. And then also get a cheaper interest rate, so about 0.25% cheaper interest rate, and to get cheaper mortgage insurance as well because she's a first-time home buyer. She was below certain income limits, and we were able to get her qualified, which apparently her bank wasn't able to. Anyways, that's just like a high level view of what we do, what I do in the loan consultation. It's always with me, so we have certain things that we go through because I want to make sure when someone's pre-approved, they understand and they're comfortable with the process. And I kind of did this and I'm not proud of it. There was a period of time where I'd pre-approve someone, I'd send the pre-approval letter and I'd check in with them. I wouldn't, if they asked to meet to go through numbers, of course I would do it. But now it's kind of I want every one of my buyers to have that meeting, that loan consultation, because I know how big of an impact it's going to make on their decision to buy even, period, right?
Yeah.
Because we think everyone that gets pre-approved with us or that fills out, agents also, if they get a pre-approval, ooh, they're buying a house 100%, which isn't the case. There's a ton of people that I pre-approve that, for whatever reason, decide that now's not the time to buy. And so I want to have that loan consultation with them because it shows the pros and cons of buying a house. Yes, you're probably going to have a higher monthly payment compared to renting, but here's why it's such a big part and such an important part of building wealth for your family. And we go through the reasons why that is and show them with actual numbers based on the homes that they're actually looking at. Hey, this is a forecast of what your home value is going to look like and all that stuff. So there's a lot that goes into it, but that's just kind of what I like to do.
For sure. And I love the fact that you make a lot of good quality video content and that's visible on all of your social channels. And you were saying that you do send that video to your clients. Are there other videos that you do like to send to your clients throughout the process? 12, nice.
12 of them. So
so you're just educating them step through step, essentially.
Yeah, because it's, we've talked about it with my team. It's frustrating sometimes because we'll call them, we'll talk to them, we'll say, hey, here's what's going to happen. But for whatever reason, if someone doesn't answer the phone, we leave a voicemail. We sometimes, it's hard to leave a 3-minute voicemail educating, when there's you don't know if they're going to listen to it or not.
Yeah.
So this way, we're still calling every one of our borrowers, but we're also sending that email out with that video and information on it, just saying, hey, here's the next basically 5 days of your loan process. And here's what you need to look out for. and here are some tips to make sure everything goes smoothly. And we do that every milestone of the process so that they are comfortable, they know what's going to happen. And also, the other thing that we do is we show them, hey, here's the timeline from day one to the day of your closing. Here's where we're at. We're right here, right?
Yeah.
Because some people, and I'm kind of rambling, but some people send us a bunch of documents day one and they think that they're here. When in all reality, we still have to order the appraisal. We have to get an inspection done. We have to reach out to their insurance provider. We have to get an underwriter to review their income and asset documentation and credit. And then the underwriter is going to come back to us with any potential issues or conditions or missing documentation. And that means we're here. Sometimes through the process, depending on the individual, they might just think it's that easy that the first set of documents they send, they think they're here. And so it can be a little bit frustrating for them because they're like, I've sent you my whole life already. Why do you need another 3 things?
Yeah.
You know,
just get it done already. That's kind of what they're thinking.
Just like you can see how much money we have. Like you can see how much money I make. Like this should be a deal, like a no-brainer.
Yeah.
You know, so it just helps with that too. Like gives them like every one of those milestones. Basically says here's where you're at, and then the video and the information. Here's what to expect. Tips. All that good stuff.
Yeah, I think that's a good way to like not only educate but give them like kind of the peace of mind so they don't have to keep living with like a sense of urgency of like, okay, well, I already did my part, you know?
Yeah. Yeah.
And I don't know, I think that's really cool that you do that.
And the other thing is that if for whatever reason, you know, people are busy, our clients are busy, so we'll leave a voicemail. They may or may not listen to it, right? So these videos I really like because we text it to them and we email it to them. And so a lot of people are going to see the text and there's a link to the video and a preview of the video. And so it's a lot more likely that they are going to watch that than listening to our voicemail. And so it's different. It just makes sure that they are in the loop, because if someone never answers our calls and never answers our voicemails, but they're still buying the house and they're still going through because they're, you know, they may be busy or something like that.
Exactly.
It still keeps them up to date.
Like, up to date and like engaged in the process.
Yeah.
They get to actually follow it around more.
Yeah.
I think that's a great idea, a great practice, and something that more people should probably do, honestly.
Yeah.
All right. So can you tell us about our recent edition of Argyle and what that does for your team and borrowers?
Yeah, so we use Argyle, and the other tool is I forget the actual name of the tools. But what it does is it allows us to verify income and asset documentation. So basically, like your pay, if you are set up with specific payroll companies, we can verify, if you fill out some information for us, we can verify your income without having to ask for paycheck stubs. Also, we can, if you give us, which I get, a lot of people are nervous with their information being online. So I get if some people aren't comfortable. But we have a system that is very, very secure. So, because there are certain compliance things that they have to meet and security requirements that they have to meet to be able to offer this to people. But there is a tool that we offer where if you give us, if you log in to your bank with your bank information through our portal, we can get asset documentation, which is basically the same thing as your bank statements. But we're not asking you to go into the bank, get a bank statement from the branch, and then scan it and email it to us. It just happens like that. If you log in and fill out the information, we can get that for them. So it just makes it way quicker, less documentation, less scanning, less printing, less uploading. Like it just happens, you know.
That's really cool. So it's just overall smoothing out the process, making things go by a lot smoother.
And it does cost our company a lot of money to offer this. So, and the whole point of us being able to offer this is to make the loan experience as easy and smooth as possible.
Yeah.
Right? Like we're willing to pay for this to make our experience that much better and easy for everybody that we work with. So, because we don't like asking people to print off documents and drive them all the way to our office or trying to learn how to use a scanner that they've never used,
Yeah.
you know? So like we don't like that, but we have to like to get the loan done, right? And so these tools allow us to do that just easier.
All right, on to our rapid fire questions. All right, Taylor, what makes someone a good fit for SNMC? Who thrives here?
Oh man, someone that's willing to put in the work and wants to grow. Um, and also wants a really good, helpful culture. I think there's companies that probably have a lot more of a competitive culture. I feel like we like to help each other
Okay.
more rather
Yeah.
than there's always a little bit of competition, but I don't think it's the same as, other companies. So
Yeah.
it's a really great place.
That kind of leads into my next question. So, define the culture at SNMC and why it's better here.
So it's hard to define it because if I'm being honest, I am around a certain group of people. So our office is in Orem.
Yeah.
We office out of here in Murray a little bit. I'm here Monday, Wednesday, Friday, or Monday, Friday. Our Orem is very like we're just all hustlers. Like I feel like we're all trying to get better
Yeah.
and just kill it and just dominate the mortgage world. Not get too caught up on the deal by deal basis or, I'm not doing enough or someone's not doing enough. Like we're all just trying to just kill it,
Yeah. I love that. And I think that's kind of what signifies like a real good team
Yeah.
of any kind. Like, I mean, even if
Yeah.
you go into sports or anything like that,
Yeah.
that's a real good sign of a good team.
Yeah. Because we're all like in a, and that's the thing is we're all our own bosses in the mortgage world where we're all generating our own business, our own relationships, our own clients, our own referral partners. But we're all in it together, right? And that's what's
Yeah.
cool about being down there is it's just like we're all around each other. We're all doing our own thing, but at the same time we're all in it together just trying to just do more, just do the best and just capture more business and all that stuff. So, anyways,
I love that.
there's the answer to your question.
All right. Beaches or mountains?
Oh, we had this discussion the other day. I would probably say mountains. And here's why. When I go to the beach, I'm always on a resort. And resorts are great. If your question was resorts or mountains, I would probably say resorts because I have someone serving me pina coladas,
Yeah.
But if it's like, hey, do you like the water, like being on the water, being on the beach, being by the beach more, or do you like being in the mountains? I would say the mountains because there's clean air. You can do nothing out there and feel great. Like you can go out there and just hang out in the trees, like do a fire, and like it just feels like so good,
Yeah.
Whereas with the beach, like we talked about this the other day, my wife and I, you have to, if you're not at a resort, you're taking your crap, you're taking your chairs, you're taking your umbrella, you're taking this, you're taking that, you're taking this, you're taking that, and you're dirty and sandy, and I don't know. That we just had this discussion the other day, but I would say mountains.
Yeah, that sand gets everywhere.
That sand gets everywhere, and then you're like salty. Yeah.
It's a good answer. Okay, so what's the biggest change you've seen in new builds from 2020 to now?
Incentives. Incentives are insane. Before,
Yeah.
incentives were just kind of like meh, like $3,000, $1,500.
Yeah,
that they were
so
offering. Right?
So now, like in your areas that you serve, you're seeing that since there's more inventory, they're offering more incentive.
It's not even, I mean, yeah, sure, there's more inventory, but even before that, so like 6 months ago, there wasn't as much inventory, but it was rate is what sold.
Yeah.
Like people couldn't get past, last year, people couldn't get past 7% interest rate.
Yeah.
7.5 even sometimes, like a year and a half ago. So, and that's what sells. So builders are offering it because that's what's getting people into new builds.
Well, that makes sense.
So,
all right. So buy with the current rate and refi later, or keep renting for 1,500 to 1,700 a month?
Oh, this is a softball. Buy for sure. Buy. If you're a first-time home buyer and you don't have cash, work with a lender that is able to figure out what grants and down payment assistance you can get. Because there's a lot of funds that have been set aside by cities, counties, state and federal funds for affordable housing. So if you meet certain income requirements and you're a first-time home buyer, you can sometimes get free money to put down on a house. You're going to be paying more monthly,
Yeah.
but the long-term benefits, if you're going to buy a house, the best time is now, because if rates drop later, what's going to happen is prices are going to go up.
Yeah.
Because more people are going to be buying, because finally rates are down, So people are going to be paying more for the same house later. Whereas if you buy now, get down payment assistance or grants, rates come down, then you refi, you locked in your purchase at a cheaper price than everybody else buying in a year or two.
Yeah.
Plus, I don't think rates are going to come down very fast. I think it's going to take 2 or 3 years still to get down to the mid to low fives. And I feel like that's what people are hoping for and waiting for.
Yeah.
So it's going to take a long time.
Take some time. What's going to be like the best way for people to go about looking for like grants or down payment assistance? It would just be talking to a lender. Yeah.
Work with a lender, because there's so much crap online. Like
Exactly.
You can chat GPT it even, and like you can get some information, but it's bits and pieces. Like what you really have to do is look at the actual guidelines, what are actually available, because some grants will come available and the funds will run out. And then some that were run out will be replenished. And so then they'll have another 40, 50 grants available that people can buy if they're buying in a specific city. So yeah, definitely work with a lender, but don't work with any lender. Don't work with a bank or credit union, because they're only going to know their stuff, their offerings, their loans. You got to work with a mortgage lender that works with all of the loan programs like us, and that can take advantage of all the grants available.
So what are the benefits of our custom in-house products? Like, how do they benefit you?
Got a lot. Yeah, we've got a lot. What's cool is we control the underwriting process. So we have in-house products that a whole bunch of different weird scenarios or situations where we can get any. That's why a lot of builders work with us. We can get almost any loan done. If it's close, we can get it done. Because we have our in-house products. We control all of our underwriting. So we have our underwriters. We meet guidelines, but in the loan business, not a lot of people know this. There's a lot, like every detail isn't spelled out in the loan guides. There's some gray areas on some things. And so if you work with a broker, sometimes you're working with an underwriter they're not willing to think outside of the box. And so like anybody comes in, we're going to be able to find a loan for them. Yeah. As long as they make the money to afford the payment. If they've got a weird situation on how they get paid and stuff, we can usually work through it. But we've got investment loans, debt service, DSCR loans. We've got jumbo loans, cross collateral. So if you want to buy a property with the equity in your home, we've got SNL Direct, which is an investor loan, which basically is, I think, stated income technically. So if you're an investor and you have a really complicated income situation and you're willing to put 30% down on a property, we can get that loan done in 7 days. Like that is the craziest loan.
Yeah, that's a quick turnaround.
But yeah, that's
so it really just gives you a lot of coverage to get anything done as long as like the money's actually there. So.
Yeah.
Well, that's awesome. That brings us to the end of our show. Taylor, thank you so much for joining us today and just sharing your insights. I appreciate it so much. Where can people follow you and like find you online? And do you have any last messages for the audience?
No last messages, but you can go to Taylor's Mortgage Loans. You can just search that on Instagram. I've got a lot of information. If you've got specific questions on there, you can just message me. Um, that's about it. Like I've got a website, but most people go to my Instagram. So.
Yeah, we'll have all of those linked below. Make sure that you go follow him, though. He makes great content. Once you watch his videos, you're going to just like keep watching them and you're going to keep learning things. So go follow him. If you enjoyed this episode, please like and subscribe. Find us on all the major podcast platforms and YouTube, of course. Mind your mortgage and have a wonderful day.